Okay, good afternoon, everyone. Welcome to the final of our Demystifying Data Masterclass series. Many thanks to all you who have joined us thus far on the journey. As always, my name's Damien Rosser. I'm the Program and Development Manager at CIRDAS. And as always, we are the place to talk to if you're interested in free accredited certification and major awards in data, EDI, and in exec leadership and management. So please do talk to us if you're interested in any of those. Aidan Mahan's also on the line with us as well of the InsurTech Network Centre. So if you're interested in research and innovation, as always, talk to Aidan for your either startup or established company. And as always, we're joined by our deliverer-in-chief, Mick Cooney, CTO and co-founder of Describe Data, your home for data or insurance insights. So without further ado, I'll pass you over to Mick. Usual housekeeping is if you could keep your mics off, by all means do get involved and just unmute yourself and or pop a question in the chat, and we'll have a chat at the end of it to wrap things up. But without further ado, I'll pass you over to Mick there now. Thanks, Mick.
Thanks, Damien. So yeah, so it's you're all very welcome. It's great to see the numbers maintaining at a decent level. I'm actually very kind of pleased to see that. That's pretty cool. Usually the drop off is much more precipitous than this, so I won't take credit for it. I'm pretty sure it's more the Carlow thing than it is me. So today we are going to basically just do a fairly high level recap of, like, this is the 8th week, and I'm just going to basically cover what we did in each week in a relatively short period of time. Now, to more as a discipline for myself than anything else, what I did was I went back through each of the slides and I kind of took one or two things from each of the weeks. Like in some cases it's one slide, in some cases it's two. More as a discipline for me, so that I don't blather on forever about some topic that is kind of of interest. And then at the end, I just have, a blank slide with questions on it. And if people have anything about, like, if there's anything in particular they'd want me to talk about that we covered, or, if there's any specific issues or anything like that, I just kind of wanted, to give a bit of time at that, because sometimes I notice, I think I'm going to have loads of time at the end, and suddenly it's 2 or 3 minutes past the half hour and I'm kind of caught for time. So yeah, so that's basically what I'm going to do. And but once again, I mean, I'm keeping an eye on the chat, and Damien is as well. It's pretty much the same rules as before. If I say something, or there's something on your mind you'd like me to ask, like me to opine about, by all means just pop the question in. This is kind of what this is for. So all I'm really doing is kind of creating things to think about. And if that prompts a question, or even just a comment, or something you disagree with me on, like, please, by all means, just mention it. I'm more than happy to address it. So like I said, I've just got a relatively small number of slides. All of them you've seen before. So on the very first week, we just did a very quick kind of intro where I discussed the very basic concepts. I mentioned this kind of image from The Economist, Data is the New Oil, by Clive Humby, who was one of the founders of dunnhumby, which was originally kind of a data-focused consultancy that was servicing the retail sector. Primarily Tesco was their main client. I think they were partly behind doing a lot of the analysis behind the club card data, and they end up being bought. I think they're now a branch of Tesco, because Tesco was such a big client. The group, Tesco Group, ended up buying them. I think they do other companies as well, but I think Tesco is their main focus. And he had this big long comment about this is going to have the most text, these slides, of all of them, because in some cases I took some of the quotes that kind of summarize that particular week. So it was that data is the new oil. It's valuable, but if unrefined, it cannot really be used. It has to be changed into gas and plastic, chemicals, etc., to create a valuable entity that drives profitable activity. So data must be broken down and analyzed for it to have value. And that is kind of the full quote that, a lot of people just stop at that first full stop. And, data is just kind of inherently valuable. Beverly Hillbilly style. We shoot into the ground and suddenly data appears and we're rich. And that wasn't really the point he was making. It's that, if anyone looks at the oil industry, it's probably the most capital intensive one in the world, because so much of it is just involved in refining it and moving it around and storing it and all that kind of stuff. And that, we basically talked about that yes, data is very, very valuable. To a certain extent, it's a commodity, although in many cases it isn't. But you have to do a lot of work to it. It's a very raw material that you then have to do a lot of work on it. And actually, I did hear another comment from someone. I think it was him later, but it might have been someone else who actually said that when he was talking about how this, his quote is essentially taken out of context. The other thing he said was that data is quite unique in that, unlike almost every other raw material, the processing of it in many cases reduces the volume from one stage to the next. Whereas with data, it actually gets bigger because you end up with metadata and metadata on metadata and stuff like that. So in many ways, the processing and refinement of data often creates larger data than less, if that makes sense. So that's also another thing and people didn't really understand that. And I think that leads to a lot of the misconceptions about how basically getting involved with data involves just basically getting a money printing machine and you just hit the button and it spits out profit, underneath the table or whatever. And things don't really work that way. And that was kind of what we talked about on the first week. On the second week, I was stressing simplicity. So, all these things are very complex and by necessity are very complex. But the point what we were trying to discuss here, and kind of this is very much kind of a thesis I've learned over time, is that you kind of have to start simple. Now, doing something simply doesn't mean it's easy. And also you have to be aware of being overly simplistic, because the worst thing you can often do is come up with an overly simplistic solution to a complex problem, because that often creates like secondary problems that are often worse than the original one. And that can happen, because you end up taking a data-driven approach and you do it blindly, you don't really pay attention, and you pivot the company down this new strategy, and it turns out to be disastrous, right? A great, like New Coke is always the one on marketing, but what people didn't really realize, they actually did a lot of that wrong and totally misinterpreted the results they were getting, and, basically hammered the company, and, they had to do this massive, embarrassing about turn and alienated a bunch of their core customers, all that kind of stuff. And, these are the kind of things that can happen. So, and this goes to Einstein, everything should be made as simple as possible, but no simpler. And both those parts in that sentence are really important. It's very important to be simple whenever possible. Unnecessary complexity can cause an awful lot of problems. But there is a point beyond which oversimplifying just causes even more problems and causes you to misunderstand things and misinterpret stuff. And, we talked a lot about that. So that was kind of week 2. And to a certain extent, that second one kind of guided an awful lot of, the rest of the stuff, certainly in terms of the way I think about things. I always strive to do things as simple as possible to start with. And we add the complexity later, and that can come around. And part of the reason for that is that an awful lot of this stuff by necessity comes with an awful lot of uncertainty. So we talked a bit about essentially starting to go into the philosophy a certain amount about what exactly is and isn't uncertainty. And we had the Donald Rumsfeld quote, who probably the quote he's most famous for now. He was the Secretary of State, I think. Was he? Or was he? Yeah, I think he was the Secretary of State under Bush 2. And he had this comment about known unknowns. So it's reports that say that something hasn't happened are always interesting me, because as we know, there are known knowns. There are things we know we know. We also know that there are known unknowns. That is to say that we know that there are some things that we do not know. But there are also unknown unknowns, the ones that we don't know we don't know. And if one looks throughout the history of our country and other free countries, it is the latter category that tends to be the difficult ones. Now, he got mocked a lot about that. And in fact, I think the biography of his life is called that, or it certainly comes up in one of the taglines. So it's kind of something he'll always be remembered for. I mean, I'm no fan of Donald Rumsfeld, but I think that was a very, I think there's a lot of things if you don't like Donald Rumsfeld's politics, there's an awful lot of things you can criticize him for. I don't think this statement is one of them, but it was the kind of the cheap laugh that people went for. But actually, I think what he said was quite profound. And it's basically that there's only so much risk management that you can undertake. And because it's pretty much this whole out of the box thinking is very, very difficult to do, because by nature, we all think inside the box, right? We just have different boxes that we think inside. So, and I know some people are kind of emotionally and psychologically towards being conformist or non-conformist and all those kind of things. But you know, it's very hard to think outside of your mindset, and it's also a very uncomfortable process. So as a result, you're always going to have unknown unknowns, and those are the things that typically can be very dangerous, because they're the ones that you can't plan for by nature of like just their existence. Like if we knew what they were, they wouldn't be unknown unknowns anymore, right? So you can, you know, what you just try and do is make that set of things as small as possible by trying to think as much as possible. And, you know, hiring, like, this is why diversity and inclusion and stuff can make a lot of sense economically, even if it can be socially problematic, because it just getting a whole load of diverse thinking in place. I know actually some of the more serious like the bigger financial institutions that are very serious on risk management, they very deliberately hire outside of their norms. They will very deliberately look for people who don't really fit in properly, because they are very conscious of that type of person will think of things from a risk management point of view, even not necessarily from how to deal with it, but they'll just think of, yeah, but what if this happened? And they'll go, oh, well, it could never happen. And they'll go, why? Well, because X, Y, Z. And I was like, well, that's not written in stone, you know, and you start getting your assumptions challenged. So that, you know, can be very useful. And that goes back to that unknown unknowns, you know, and you're trying to minimize that as much as possible, but you kind of have to acknowledge that it exists, right? Because, you know, it's very dangerous to say that something is impossible, because unless it literally defies, I wouldn't even say the laws of physics, I would go with the laws of thermodynamics, then I wouldn't necessarily hold that true, right? Because, you know, just a lot of strange stuff happens, especially when you're dealing with any kind of human related activity where, you know, you have emotion and rationality isn't necessarily a driving force and all that kind of stuff. So anyway, so we were kind of discussing that kind of stuff, and like I said, this is why I stuck to one slide, because I can already see myself talking down a rabbit hole on this topic. So because it is, you know, the whole philosophy around uncertainty and how we deal with it and how we think about it is just a fascinating one to me. And also, you know, when it's important to try and quantify this uncertainty, and when it's inappropriate to do that, and when it's, in fact, it's dangerous to do that, because you can create like false precision about your answers, which can be, you know, very, very dangerous. So we talked about that, and that kind of led very naturally to statistics, which is basically where we can quantify uncertainty, or at least attempt to somehow get some kind of, you know, let's say quantitative rather than qualitative understanding of uncertainty and errors and all that kind of stuff. So I talked a little bit about, you know, how people lie with statistics, and we talked about some bad data visualizations. This one in particular, and this was a bit of a multiple threat, because it was talking nonsense about correlation. So it was basically someone realized that there is a correlation between pirate activity and global warming, and it's actually quite high correlated. But this is also combined by an absolutely terrible chart. So if you see what we talked about here, the x-axis isn't monotonic increasing and kind of goes up and down a bit and has all sorts of weird stuff in it. Then the numbers, the years, while equally spaced apart, have different years on them. And also there's no zero axis on the y-axis, which is a big no-no. It's a great way to mislead people. And then I just showed, we had another one where this is essentially a similar data, but done more intellectually honestly, let's say, where you can kind of see the declining activity of the estimated worldwide pirate population and global warming. And you can kind of see that, you know, as the pirate population declines, the world gets hotter. but it doesn't have a straight line, and it still makes you think, well, it's still probably kind of nonsense, but at least it's a better visualization, and it's not actively trying to either A, melt your brain, or B, make you too stupid. So we kind of talked a lot about kind of statistics and when it's useful, when it isn't useful, some very basic ideas around it. And again, because it wasn't, I'm trying to keep it relatively high level. I was focusing primarily on how people can often use statistics to mislead. So we talked about the replication crisis in statistics and all that kind of stuff, where this kind of drive for some kind of certainty can often basically lead people to being misled, sometimes willingly and sometimes kind of ignorantly. I mean, sometimes like it's willing, like you kind of act on a subconscious level, you want to be lied to because you don't want to have to deal with that kind of uncertainty. So we had some statistics. As a result of that that week, we very quickly went into data visualization because people said, a week on data viz would be quite useful. Machine learning. So once we'd kind of talked about statistics, a very natural kind of segue to that is into machine learning. My apologies, I got my weeks mixed up. And I didn't want to get into too much detail, and I tried to avoid it as much as possible because, a lot of it isn't really necessary for you to know. You just kind of have to understand the basics of how things work and understand the major terms that people were talking about, like test and train and validation and deep learning. And, there's a few things that as long as you have a basic idea of what they are, that's kind of all you need to know. And it's mainly to prevent being lied to by, slick people who will try and sell you the world. But a particularly relevant comment to this was Dan O'Reilly, who we mentioned a few different times because he's a psychologist who's done a lot of work on lying and motivated work and stuff like that. But he has a great talk on comment about big data from about 10 years ago, which is basically you could put machine learning in here because back then it was called big data. The machine learning term kind of came along, it was called big data up until about 2014, 2015. And then machine learning kind of became the new buzzword. And now it's AI is the buzzword. And you kind of see these cycles of marketing hype that happen. And he basically said that big data is like teenage sex. Everyone talks about it. No one really knows how to do it. Everyone thinks everyone else is doing it, so everyone claims they're doing it. And that is very true, at least in my experience, of companies. Like in some cases, they are using machine learning, but in my experience, the places they're using machine learning is not the places they think they're using machine learning. So there is an awful lot of like background stuff in terms of, like call center optimization and operational type stuff where like their vendors are doing it or their service, but it's not sexy. It's kind of like talking, I got a great comment from someone once about how no one ever brings someone over to their house to show them how good the foundations were or how well the plumbing's done. They just want to look at a pretty kitchen, right? And that's what attracts people. And the reality of a lot of these techniques is they're mostly interesting from a background infrastructure and operational point of view. That's typically where I think these techniques are going to primarily be used. But that's often it can be sometimes hard to quantify, and it's hard to get a splashy headline from it. So people always like to talk about how, they're using AI to, better, forecast new risks that the customer never even thought of and all this kind of stuff. And some of it's true, but I take an awful lot of those claims with a lot of skepticism. In my experience, a lot of these claims tend to give you very impressive results under like very controlled academic conditions where you can kind of set things up to be suitable. But once you start bringing in the real world with messy data and haphazard data collection policies or just the normal, no matter how hard you try, just reality is messy and noisy and finicky and inconsistent. And when you try and actually get those kind of results from this, it often doesn't work too much. So we talked, it does work, but it often doesn't work nearly as well as people, would expect it to, which is why you end up with kind of this. If anyone, there's a famous cartoon of like the technology hype cycle, and there's a thing called the trough of disillusionment, and then it kind of ticks back up again at the end to like, broader. So the way it goes is it starts, no one's really talking about it, then it gets a few early successes, and then the marketing machine kicks in and you get this massive spike, and you get all the hype and the crazy, for any technology, you get all the crazy predictions, money starts pouring in, everyone starts doing it, and then reality slowly sinks in, and then it moves into what it calls the trough of disillusionment. That kind of flattens out for a little while, and then after a while, once all that's going on, the original promises that people kind of are usually reasonably accurate on, it finds uses, and it slowly kind of gets adopted over again, but with much less fanfare, because the hype machine has turned its target to something else. And that's typically what happens in all the, and this stuff is going to be no different. And now it might be the particular applications will change. I think we mentioned natural language processing is starting to get an awful lot of like focus and attention now. But from what I've seen, most of the particularly like really useful and like high ROI, I should say, uses for this stuff are in the infrastructure and the plumbing and kind of the boring back office OpEx type stuff that isn't particularly sexy to talk about, and can often be hard to explain to people, so it can be a difficult sale as well. So that's just why it tends to get ignored. So from the back of that, now we actually went on to data viz, because having had a chat about statistics, having had a chat about data viz or about machine learning, I used a few different data visualizations and I talked about it a bit. People were asking about that. So we had a quick talk, and again, I referred, it was the whole idea of just doing some simple stuff. So, I created a very simple visualization of a claims rate based off of a publicly available data set for French third-party liability motor insurance. And we were just trying to get estimates of claim rates, and we used like the bootstrap, which is just a very simple way to get uncertainty estimates around averages. And I was just showing, a relatively simple plot of error bars and things like that can be, not particularly complex to implement. Relatively, a lot of these things, maybe not quite out of the box, but pretty close, with, relatively minor amounts of massaging. And, from a relatively, I keep saying relatively, from a simple point, you can convey the ideas that you were trying to convey, which was, we were just trying to get a sense of like which regions have the highest claim rates, what's the uncertainty around them, how do we deal? And, that a plot like this does this. The other thing to look at though is if we can, sometimes we want to put things on a map, because people love maps. And sometimes even it's, to me, like this isn't nearly as useful as this is, but this does look a lot prettier. So depending, one of the constant themes of the whole class was culture being so important, and, senior management and stakeholders being willing to accept these things you're trying to tell them. And sometimes you kind of have to play the game a bit. So my advice to always this is, if there is a way to shoehorn something onto a map, create a map if you're looking for buy-in, because this is the kind of thing they'll realize later that they probably won't get used, but you're giving them what they want, and you're giving them something they can understand. And and that's actually quite important, because they've got a lot of other things on their plate, and this is kind of something they can figure out. And to me, it's always been a relatively easy way to get decent buy-in for other, like the more usable things that you're going to do later that maybe are a little bit harder to explain. So yeah, so we talked about, and we discussed that, and like maps aren't great because they can often be like, you can't really show the uncertainty the way you can show the uncertainty in a box, in that kind of error bars, and estimates of uncertainty. And so we talked about a bunch of those different ones. Then finally, kind of getting it into the final wrap up, which is kind of where I was hoping to spend about half an hour on this. We talked about, okay, so given like all that we've spoken to up to this point, how do we get started? Like, what do we do? So if you're convinced, or even like convinced is probably too strong a word, but if you think that there is an untapped resource within your organization around data that you probably could be using a lot more of it than you are, and it's just not being used in the right way. How do you get started? Because there's quite a few things to hurdle on this. You need to convince a bunch of people to come along with you. You probably need to get resources. And one of the things, a key thing that I always said to people was, there's no point in doing this unless you get kind of senior management buy-in, and to a lesser extent organizational buy-in, but senior management the most important, because they're the people who tend to be able to make things happen, and because they'll tell the people below them what's important. So people tend to do that. But secondly, these kind of from having spoken to an awful lot of people, projects fail when something is sold on a great idea, but they're not really willing to commit any resources to it. So they say, this is a great idea, you can totally do this, but you're going to do this in addition to your normal job. So it's like, congratulations, your reward has been more work for no extra pay, right? Purely, and obviously, probably you won't get to keep the upside either if it's a massive success, right? So it sends a very, very bad signal if people are not willing to commit like time or budget to this kind of thing. And like I said, budget doesn't necessarily have to be money to hire in external consultants or hire in a vendor or get more bod headcount or anything like that. It could literally be like the equivalent of Google's 20% time. It's like, oh, actually, yeah, what we're going to do is we're going to, your normal stuff is going to be reduced to say 3 or 4 days a week, or even, you're going to hive off 2 or 3 days a month to start pursuing this kind of thing in whatever way, or maybe you're going to be seconded to this project for a month to kind of get it up and running. But those kinds of levels of commitment need to be in place. Otherwise, people just aren't going to value it. So I mean, to be quite blunt, one of the reasons why I was very surprised about the participants, this is because this is a free course, and typically when we do free stuff online, we don't care if we don't really go, and this was a big problem for meetup groups actually pre-COVID, because you would try to, now I'm too cheap and I don't want to have to deal with money, so I don't do beer or pizza or anything like that, because it would involve getting sponsorship and paying for it and managing money and all that nonsense, and people get really weird when it comes to money, and it takes away from the whole volunteer ethos. So I just don't do any of that. Now, sometimes venues will provide food, or if they're like looking to hire and they're using their space, they'll put on beer and pizza or whatever. But I don't ever ask for that, and I'll kind of discourage it, purely because people show up who are there for the free beer and pizza, and we've had a bunch of people who will literally show up for the beer and pizza and leave before the talks start. And there was a few people around Dublin that were notorious for that. But as a result, there's now like a management problem of trying to figure out, some places you need to sign in at the door, or some places like Crazy Tech, they'll actually make you sign NDAs. So there's like a lot of logistics around it. And if you've got a load of signups, if let's say the room can handle 40 people, well, how many people should we let sign up? We can't really stop it at 40, right? Because I know 40 people aren't going to show up because it's free. Now, if I charge maybe a $5, people would actually show up, but then you get a lot less people, and then you're back into the hassle of handling the money, right? But free stuff is not valued by people. Whereas if you force them to have skin in the game, suddenly they're on the hook a bit. Now, the flip side of that is it means it might not start in the first place. But to me, if there is no skin in the game for the people involved, you're probably not going to succeed anyway, because it's not going to be valued. You're not going to necessarily get resources. And also, when it boils down to it, attention and company resources are limited. And if it's you and 2 others, and there's skin in the game for the other 2 things and not for your project is probably going to lose, right? Because they have skin in the game in the other 2. So you kind of need to create that whole thing. And that was kind of what we talked about trying to do that, but also planning it. So I kind of had the comment from Winston Churchill about in the experience of war, plans are useless, but planning is invaluable. So the logic there is that, like, everyone knows I think, I don't know who said it, but it's like no plan survives contact with the enemy. Or the famous Mike Tyson one about, I think he was in his uncontested fight with Michael Spinks in the late 90s or early 90s. And he said, like, Spink has a plan for your aggression. And Mike Tyson just said, everyone has a plan until they're punched in the face. And that is very, very accurate. You can plan as much as you like, but ultimately the entire plan will get thrown out the window probably within the first day. However, the point of planning isn't necessarily to have with a plan that you're going to execute. It's more like you're thinking about it goes back to the knowns and unknowns, right? You're trying to think as many known unknowns as you possibly can and have some kind of contingency in place so that when you're hit by things you didn't anticipate, you kind of have some idea of how to react to it, as opposed to spending precious time trying to figure out what to do. So it's like you said, and that's kind of the way we talked about approaching these projects. You kind of think about what you're going to try and do. You bake in the uncertainty and the uncertain outcomes into that planning process. So you know that you don't necessarily know what you're going to have after a month, but you know you're going to have something. You just don't know what it's going to be. And what you might have might be this isn't going to work and we should stop, right? Because there's just we need too much help from, say, IT, and they're massively under-resourced as it is. They're just about keeping the lights on, and we just need too much of their resources. So the only way this is going to work is if we either fix that problem or hire more people or whatever it is. And if that's not a runner because of budget constraints, well, then there's just no point in doing this anymore. Let's just stop. Or you might find actually, we've actually got, and this has happened. This has happened to me. Actually, we found out, what we were trying to do, or at least the first part we were trying to do, is actually the pieces are already there and it's just a matter of putting them together. And we're kind of halfway through the job. And in a week or two, we'll actually have a pretty big piece of, I don't want to say functionality, but we'll have a pretty big answer to one of the questions we came up with. And that's kind of, it was just there. Because we're now looking at it with a fresh set of eyes, we realized that it was just kind of like, we have basically a few different Lego blocks that we can combine together in this new thing and then answer those questions that, customer service were asking us. It was just that no one had actually had the time and effort and attention to, push these things over the line, or to realize that, there was a thing over here that we could use that is already there and we don't need to get any approval for it. And then we can just use all this. So these are the kinds of things that you're aware that all of these are possibilities. So you kind of build that into your overall approach. So it's not really outcome based beyond very, very high level outcomes of, we would like to know more about what we have and what's available by the end of a month, let's say, or by 6 months. And, once you have that, but then kind of, and someone mentioned it sounds a lot like Agile, you kind of use that kind of philosophy of, as you're working, you'll learn more about what you're trying to do. And as a result, you can start to, your goals can start to coalesce around some concrete outcomes that you think are either feasible or deliverable. And then you can throw other ways ones because you realize actually this here sounded fairly straightforward and just needed, a couple of months of work, but actually, the data isn't right, or the software license doesn't work anymore, or like we're not licensed for that and the license for it is massively expensive. So it's just not, the risk, the return on investment just isn't there. So there's no point in spending any more time on that. And that's kind of, so that's kind of, we talked all about that and I got a few questions on that. And yeah, that was kind of where we left it last week. So that was a quick, how long have I, yeah, I've gone just over the half hour on that. That was quick, like in a relatively, let me just move back. We kind of, we had a quick intro. We talked about simplicity and uncertainty and, how they manifest. We then got technical for a couple of weeks with some statistics and machine learning and talked about various kind of technical things, trying to keep it at a high level. Although I did hear from a couple of people that they did find it kind of went over their heads from some people I know quite well. So they were happy to be blunt with me. So I'm not sure how well I succeeded on the machine learning one. We talked a bit about data viz and then finally kind of went through the various kind of management and kind of high level political and soft stuff around getting these projects going. But at that point, kind of, that's where I didn't want to go into too much detail. I hope I didn't. But what I wanted to do towards now that we've got about 10 or 15 minutes left, if anyone has any questions or comments or things they want to say, or even completely, please have a go, or want me to talk about something. I mean, I have all my slides available. So if there's something I mentioned like in week 2 or 3 that you'd like me to go back to. Oh, the one thing that hasn't occurred to me is I don't think Demi and I shared the URLs for all my slides, just in case someone wants them. What I'll do is I'll create, because this is all off GitHub. So what I'll do is I'll create a landing page that has a link to each of the 8 sets of slides, and then I'll share that URL, and then you can just click through to all of them. It should work. But yeah, so I guess it's kind of over to you guys, or Damien, or anyone else who's here. If anyone wants me to talk about other stuff, it's kind of, and then I'm happy to kind of take whatever. I don't think there's anything in the chat, is there? No. So
that's fair.
Yeah. So by all means, it's kind of open to you guys. I mean, I hope you found it useful. I tried to keep it relatively high level. I sometimes did have to pull myself back from going into the weeds too much. I'm probably with greater and lesser degrees of success, I imagine. But yeah, if there's anything that is on your mind or you would like to ask, now's your chance, basically.
Yeah, so if anyone wants to pop anything in the chat or unmute your mic, by all means do volunteer. Just from my perspective,
speak now or forever hold your peace.
Yeah. Just from my perspective, it was interesting there, Mick, you mentioned about kind of changing the mindset within some of the organizations. I would have encountered that a bit, I suppose, when I was working in banking. I would have seen, I landed
it's very challenging.
Yeah, I would have landed in with a not massive amount of qualifications, a couple of qualifications on my arm, but one of the first things they asked me was, did I want to do SEMA or did I want to do ACCA? So we could think like everyone else. And I kind of felt that has a role to play, the kind of institutional level groupthink.
Yeah.
Well, in crises like we saw, and particularly in smaller things like turning around an organization, how they think, and that change management piece.
Well, I mean, they kind of have to be, right? So beyond a certain point, companies kind of have to have that institutional memory, because from an organizational point of view, it's really, really dangerous to be reliant on a single individual. Because if that individual, no matter let's ignore honesty and dishonesty, and like, let's say the person gets hit by a bus or becomes terminally ill or whatever, suddenly your institution isn't viable anymore. That's just like, companies are designed to make people replaceable, which is why you always see those motivational things on LinkedIn. So LinkedIn, unfortunately, is getting a lot of other bloody social media now. There's a whole lot of inspirational quotes on it and stuff, and it's like, oh, for God's sake. But there was one great one, which is something like, and it was meant kind of negatively, I think, but there was something along the lines of, there's no point killing yourself in a job that's going to replace you 3 weeks after you die. And, it was meant in a very negative way, and while it's very true, and I totally believe that, unless it's your own business, to a certain extent, I do see people who just dedicate their lives to their job, and, if they want to, that's fine. But, it's a bit like you're loving something that isn't going to love you back, right? And it can't. Like, it's designed to be resilient to those kind of things. And it's very important from a society point of view, because it provides a certain amount of stability. These organizations are kind of set up. I was having a conversation about this last night. It's why it's so hard in the startup world, because when you're coming from a corporate job, and it's why so many people who come from a corporate background and get into the startup world struggle so much, because when you're coming from an entity that has essentially designed to make money almost in spite of itself, like the status quo is that it's profitable. That is an incredible advantage to have, right? Whereas in most startups, that is not the case. Like, regardless of how much activity gets done, or solopreneurs or just sole traders or whatever, if you don't do anything, you don't make any money. You don't make a living, right? Whereas in these larger, I heard a joke once about a UK-based insurer, and one of my colleagues was talking to the MD, and he basically said, the reality is I could put a ham sandwich on my desk and I'd probably make it to retirement. And now, I'm not saying it, he said, he laughed and he went, now, I'm not saying it's a good business strategy, but that is the reality of the inertia that you've got. So, you have a lot of that, and that's very, very necessary. But the problem, the flip side of that is that it can make it very resistant to change. And in one of the major kind of challenges in these larger organizations is how to change in a way that doesn't actually destroy the organization, because you can very easily do that and cause a lot of problems. You know, and companies do go wallop. Big companies go wallop. I mean, we saw that in 2008, right? Massive institutions almost certainly went out of business, and would have if governments hadn't came in to bail them out. So these things can happen. So I'm seeing a bit at Cheshens here that I found it very, very Einsteinian, meaning you understand it so well. Oh, okay. Oh, well, thank you very much, Colin. It's nice to hear. I mean, my biggest concern, I've made this too simple, because that is a big concern too. That's almost worse than not being, being too complex. Watch about Schmidt. I've heard of that. Okay, I'll have to watch that. That sounds very good. No doubt to confirm, we can't even imagine. I feel it's hard to sell to get, to an unknown problem. Yeah. So, yes, that's a great point from Susan B, is that it is definitely a hard sell. And in my experience, the only way it works is if senior management are on board. And often it's only because senior management realize this and they get on board with it. And I've seen that happen and it is happening. We are starting to see it actually from a bunch of senior people, even in finance, which is traditionally incredibly conservative. They're starting to see that the world is changing and that they're not necessarily in a great position to deal with it. And, senior people are starting to sponsor these kinds of programs now, unlike everything else, it'll be very mixed success, because I think we discussed it in one of the weeks. Senior management attention can be a two-edged sword, because typically, especially if they get very enthusiastic about it, they have very good intentions, but they want to start seeing results, not out of impatience or anything, just their natural enthusiasm. So reining that in and saying, no, we actually need to do nothing for like a couple of weeks and have a think about what we're planning to do. We don't Leroy Jenkins, right? And that can be that's almost as hard the other way around, if you know what I mean. But yeah, if your senior guys aren't on board and they're not willing to commit resources, then I think you're basically dead on arrival. Like I don't see these things. What will happen though is the world will move on, and in a couple of years, like they'll either be replaced or someone will come in or something will happen where suddenly it will become a priority. And that's typically, the progression that we see. Finding a problem senior leaders need solving is a way to build. I did hear there's a really interesting guy called Adrian Jones, who's big in InsurTech. He's on LinkedIn a lot and he talks a lot. He was one of the first, him and another guy were quite critical about Lemonade and all those, that just purely from a loss ratio point of view, said they weren't really making a lot of money. But he basically said that one of the ways in which he kind of buys trust is when he comes into a job, he looks around for the first month or two and he tends to get a sense of there's typically a whole bunch of things that need doing in an organization, but for one reason or another, they haven't gotten over the line. And all it typically takes is a small amount of force consistently applied over a short period of time to, finally get something done. And what he will typically do is do a bunch of them at the start. And that way he kind of gets allies internally and he builds a bit of trust, because he gets a reputation then of he's not that long in the job, but he's already achieved, and he's quite a political animal from what I've heard. So I'm sure he figures out ways to gain credit, right? And that the credit doesn't go elsewhere. But basically he went on record saying this is a meetup, so I don't think I'm speaking out of school. But to me, that was a very clever and an honest way of gaining political capital internally within an organization. If you kind of go in there, you're the new guy, you kind of have to prove yourself. So you just find a bunch of things where in many cases, like 90% of the work is done. It just needs that bit of pressure to get it over the line. And in large organizations, there's usually loads of them, right? So you just do a bunch of them and now you've got a few brownie points in the bag that you can start to spend. And I always thought that was quite a clever way of doing it.
Just looking at Pat's comment there as well, Mick, you're probably looking at there now. That's kind of
GDPR. How can you be sure that you're not in breach of the same with complying data? We're entitled to use a lot of the data we have in the insurance. So GDPR is a bit of a minefield. It depends on whether or not it's personal data for a start. In a lot of cases, one thing I found with insurance companies is they don't often have, certainly on the insurance side of things, you actually don't have a lot of company individual data, because it's about companies, or it's about areas, or it's not necessarily personally identifiable. If you're on personal lines though, it's a very different thing. To be honest, I am not an expert on it. Typically and I'm not, I mean, it was in the news recently. I think Italy came out today and basically have said that Google Analytics is illegal. And because it cannot be in compliance with GDPR, like fundamentally. And that's following, I think, Austria and France started it. I don't know if France have actually declared it illegal, but so, I mean, yeah, the short answer into that is that's kind of where your data compliance comes in, and you try and figure out what you can use. I have found though that I often feel though that personally, like the data that falls under GDPR isn't often nearly as useful as people think it is, unless it's like policy at the policy level. Quite often, there's much more useful data to be found from an operational point of view, or like, you know, like metadata type stuff about like how things are working internally within an organization, all that kind of stuff. So if GDPR is something you're particularly worried about, you basically need to, and I think the only way to do that is to speak with your compliance stuff from the get-go and get them signing off on it, because it was a lot more uncertain a couple of years ago, but now GDPR has had a good bit of time to bed in. Most companies have fairly good policies on it now because people were terrified. So in many ways, we actually heard from a talk, I think it was 2019, where they were actually saying there was a massive over-compliance because people were self-reporting their GDPR violations that weren't actually GDPR violations, but they were so afraid of it. So like, and I think in a lot of cases, it's just trying to do the right thing with the data. And the key one is not using it for something it's not supposed to be used for, right? If it's insurance related policy data and you're using it to risk assess policies, that falls under one of the pillars of GDPR. That's actually like, that's legitimate use cases. They're more worried about things where you're harvesting data and then putting it to like marketing uses or profiling for things that aren't related to why you were collecting the data in the first place. Oh, thank you very much. Thank you, Teresa. That's very nice. Do you think that data reporting should be in here? That's a good question. Yes. I mean, so just a comment there from that, should data be its own functional unit as opposed to falling under IT, finance, marketing? That's a good question. Like a lot of things, though, it depends. And it depends on your organization and how you're structured and all those kind of things. I definitely feel it's not fully understood and appreciated yet how complicated it can be. And I think companies are slowly starting to come to that realization now, because data engineers are becoming very much in demand. And I think what happened was, kind of talking with the hype life cycle, I think a lot of people hired a lot of data scientists out with PhDs and out with masters and stuff. And they came along thinking they were going to fit all these cool models and do a whole load of cool stuff. And then they very quickly realized that the data wasn't there, and they ended up spending an awful lot of their time, you know, writing SQL and creating reports and stuff. And I think that's kind of came back full circle now, where people have realized, actually, we can't do all these really, really good things if we don't spend the time and the money and the effort. So, but certainly in certain cases, they're not doing the refinement bit and they're not investing. But a lot of companies are starting to realize that, and they're starting to put the time and effort in. Now, you know, it depends. But I think it's definitely true that these things need to get a lot more investment in them, because it doesn't just happen by itself. There's a data IT area and compliance area should be aligned. Yeah, absolutely. Like, I think that all we're seeing now is the regulations are only going one way. And we've started to hear that from the open stuff like that, like in terms of your machine learning models in finance and in insurance. I think it's coming everywhere. It's just a question of when. And some areas will probably fight it more than others, or some areas it'll probably be less applicable because people aren't as worried about it as they are in others. But yeah, I think, and that is a big challenge for people like me who have to start being aware of that. Although in most cases, it's actually I mean, it's not as scary as it sounds, because in most cases, the way I see the regulation going is they realize that you can't really be too prescriptive on these things. So it's all they're really enforcing is intellectual rigor and honesty. So they want you to make sure that you understand the failings of your model and what steps are you taking to rectify that or to try and combat them. Not necessarily don't use them, but make sure that, okay, for these particular models don't do particularly well for these particular subsets of customers or for these particular types of things. And here's how we try and deal with that situation. And here's what, and that's kind of the direction the regulations seem to be going in. Recent experience, been asked to look at data and what management thought was happening, and they had expectations as a result. They told me what they expected. I disappointed them with what was happening. Yeah, I mean, that you are not alone there. That happens all the time. The big key test for me, though, is how they responded to that. Now, if they told you to basically go back and do it again until you get the right answer, that to me is a big red flag, because all they're trying to do there is provide firepower. They don't really care about the truth. They just care about reinforcing their own ideas. And, sometimes, however, it's not nearly as, like, I make it sound very nefarious. Sometimes management know what's going on and all they're looking for is ammunition for a negotiation with the client or something. Like I mentioned it before, there was the UK insurer who had problematic brokers and they were just looking for it. But in that case, usually you find out exactly what they found. One of the arguments actually I often get from people is they'll give me their data and I'll start telling them stuff they already know, and they say, well, what use are you? And that, kind of my argument to always that is, yeah, but you've got 20 years in the business. I've been looking at this data for 3 days. That's kind of my argument, is that, like, I can actually learn things that it took you a long time to understand, and I can see it immediately in the data. And that to me is a very valuable, now that isn't necessarily always well received, but if someone's going to be combative like that, I might not necessarily say it as bluntly as that, but that's kind of how you couch it, right? And so that will often happen too. I'd be curious, Stephen, to know how they reacted to that revelation, though, because it can be, in some cases they'll just ignore you, which has happened to a bunch of my colleagues. Never quite happened to me. Most cases, I think I've never really found out something that directly contradicts what was expected. I can't think of one offhand. I'm sure it has happened, but I haven't thought of anything offhand that has happened to me. But yeah, you can tell that's a great acid test for how serious people are once in that situation. That's a good situation to be in many ways, because you kind of find out very quickly, how serious people are, or are they just looking for confirmation bias and evidence for their own confirmation bias. So involved at the GA national level, we need player personal details for competitions, but under GDPR, we need to collect it separate from the club registration for competitions. Yeah, sure. And that makes sense, right? Because the registrations falls under GDPR, but clubs don't, because they're organizations. They're not actually, that data is, now, unless it's changed, but my understanding of GDPR was it's personal data and organizations are not counted as personal data. So they don't fall under those restrictions in terms of GDPR. Now, I'm sure they have other privacy issues that you have to be worried about. Okay, well, that was a lot of comments. Thank you. That was great. How are we doing for time? 25 past. Yeah. So does anyone else have any comments or questions or anything like that? But yeah, sorry, I just see it there. The whole compliance and doing this stuff properly, it was that is massive. Like, because what could happen is a bit like what's happened Google, right? You could have this big project that shows loads of results. You start spending a lot of money on it. It's going to be really, really good. And then all of a sudden you realize, actually, this isn't compliant and we have to can the whole thing. And that's just very, very demoralizing as well. So you probably want compliance. In my experience, though, and I guess it depends on the individual, compliance are usually seen as a hassle by a lot of places. But if you've actually got the right compliance people, or just approach them properly, like come to them early and see them as a stakeholder in the problem rather than an annoyance to be overcome, typically they respond quite well. I've heard quite a few stories about that where actually compliance were great. They were on board. Because quite often what will happen is you've got all these forks in the road and they all kind of look the same to you, and maybe you start evaluating them from a technical point of view, and then compliance will come along and say, well, you don't want to do these 3 ones because of all these issues, but these other ones are fine. That's great, right? They've reduced your decision space, so there's less things you have to worry about. And it's, so from that point of view, it can be very good. Sorry, they're okay. Just had an assumption on what was going on, opened up issues with how work was recorded, right? So yeah, sorry, that was the other thing I meant to ask. It's entirely possible that they were right, but the data was being recorded wrong. So it looked like it was completely different to what they expected. So that's another thing. So in some ways, you can actually have completely contradictory expectations and both of you be correct. But because of this mismatch between what's actually recorded, how it's recorded, and how it's then interpreted, can mean that you have these very varying outcomes between what people think is going on and what's actually going on. And basically they're right, like the people are correct and it should be represented in the data but isn't, and that's quite common. Cool.
Well, thanks very much everyone for the comments there. Thanks for that was very good, and thanks Mick for there's some
no problem.
real nuggets there and what people have volunteered. It was interesting.
I should say that.
Yeah, sorry. Yep.
I should just put my email if anyone wants to ever like ask me, like this is my I think I show it. That GitHub repo is where all the slides are. But like I said, Damien, after this I'll put it into like I'll just create a little readme file with the 8 links, and then we can share that and people have. Now I don't know how useful it will be, but just in case there's some images that people want to reuse or whatever, that's fine. Sorry, I cut across you there.
Yeah, no, I was just saying Gavin's one was interesting there. Worked in a startup and we had a similar problem I talked to you about before, Mick, where everyone approached meetings with their own version of the truth. Everyone had access to the data and everyone was looking at it slightly differently. So what we had to do was centralize it, and we centralized how the data should be viewed for the entire organization, and then it spread out from there across the various different reporting functions, which we found was the best way to do it. I might actually push you, Mick, now to tell people a little bit more about Describe Data and your Dublin data science workshops as well. I know you don't like
I'll certainly talk about. I'll talk a bit about. I'll talk a bit about Dublin data science because we had a talk last night. So how I kind of got into the public speak, like talking a lot and stuff, is I'm involved in a meetup group in Dublin. It's called Dublin Data Science. It's on meetup.com currently. It's still a little bit up for discussion as to whether or not we stay on that, because it's a couple of £100 a year. I think I'm not entirely sure it provides value, especially with other channels. But yeah, we hold kind of monthly talks. They're now back in person. We had the second one last night. We generally do it once a month. We also I generally run monthly workshops, which have stayed online and probably won't come offline because it's just a very convenient way to do it. And that gets a lot more technical, where we talk about, like right now I'm doing customer lifetime value and Bayesian statistics. We had one last year on basically data science soup to nuts, which was just basically a full data science project from start to finish and all the kind of the pitfalls you come across. We've kind of technical, and we always take requests as well. But if any of you ever have a talk you want to give, or you know someone in your organization that is technical and would like to give a talk at a meetup group, please get in touch with me. We do that a lot. And yeah, it's really just a bunch of people kind of like me who just want to talk about data stuff and modeling and all that kind of stuff. We try to have talks that aren't necessarily covered by a lot of other technical meetup groups. So we do tend to we kind of range from the very soft to the very technical. Like we had one during lockdown from a speaker. I'm going to try and get back in person on basically how to put models into production. So she didn't really discuss any modeling at all because it wasn't really important. It was more like, we've built a model, we're happy. How do we now put it into so that it becomes part of BAU? And then how do we maintain it over time? What do we look at? So that's kind of, that's Dublin Data Science. And yeah, I work for Describe Data. We're a small startup working in the insurance space on specialty insurance primarily, kind of creating tools to enable what's called bionic underwriting, which is kind of ties in with a lot of the philosophy. There's one thing I do try to be, it's reasonably consistent. So all this stuff can be used and can be very useful, but I'm a bit suspicious of fully automating everything. So in many cases, it's more like, as the joke is from the $1 Million Man, it gives people a bionic arm so that they can kind of automate a lot of the crap and then do the high level decision making that's actually the important stuff. And they don't have to spend their time, spending a couple of days putting together a Word report where they're just copying and pasting from spreadsheets and Word documents and Google searches. So it's we work in that space, trying to help kind of specialty insurers on that type of stuff. Yeah.
Well, thanks very much, Mick. I knew I could try and get you to tell us a bit more about all the great work you do with the Describe Data and the Dublin Data Science. So if anyone wants to get in touch, let Mick know. There to do some great work in Describe Data and the Dublin data science workshops are very interesting as well to join.
I should give out a shout for anyone interested in kind of the insurance or entrepreneurial space. Two things actually here in Dogpatch Labs, where I'm giving the talk. They have First Fridays for Startups, and they're having their first in-person talk tomorrow. Today's Thursday, tomorrow. That might be too short a notice, but InsurTech Ireland is having its first post-COVID event next Tuesday here in Dublin as well. So if anyone's in the area and wants to come in, you can go to InsurTech Ireland, just Google it, you'll find them, and there's an event next Tuesday. They have a few speakers from a couple of Irish InsurTechs. It's usually a good night. They're much more generous than I am. They do have free beer and pizza. So yeah, you can, but that's always a good night.
Hey, thanks, me and Mickey, and turn up for the free beer if nothing else.
Exactly.
And you'll feel more intelligent definitely after the beer and hearing some of the speakers.
Yeah.
So it's a double whammy. But no, thanks, me, for the last 8 weeks. Mick,
thanks for having me.
That's been brilliant. Always feel more intelligent after the hour each week. And thanks very much for everyone to getting involved and staying with us throughout the full 8 weeks. Just a small bit of housekeeping for those of you who've attended 6 of the 8 classes. I'll drop you an email. I'll just like a little feedback questionnaire, and then we'll send you guys out a certificate of completion in the next 5 to 6 weeks on the course. And by all means, get in touch with Mick if you want to know more about Described Data or Dublin Data Science or the startups in the Dogpatch there, as he said. And for ourselves, we have a number of courses that we have, as I said, free under CIRDAS, which we'll be launching in September. So please get in touch with us. And if you want to get in touch with Aidan in the InsurTech Network Centre Research Innovation, by all means do. But please do keep in touch. We're taking a little break now from masterclasses for the summer to let everyone recharge the batteries, and we'll be back in September with more masterclasses, and as I said, more free accredited certification for you guys as well. So thanks very much, everyone. I hope you really enjoyed it, and please do get in touch and join up with us on LinkedIn and other channels. Thanks very much.
Thanks, Nick. Thanks, everyone. Yeah, thanks.
Thanks, everyone.